Hi traders and welcome to the Technical Analysis Market Watch on Friday the 19th of September. So I've seen some all-time highs again on the market and we've got some key levels approaching on a lot of the key instruments that we look at each week. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see we've had actually a really good week of levels that have been hit on the top side and the bottom side, actually. So we'll go into a smaller time frame to understand exactly what has happened, but we can see here just on the broader scale that we broke through the resistance level late last week, and then we came up, hit the basically the 67-cent mark, which we talked about last week, and came all the way back down to the level that we broke in the first place. But when you go to a smaller time frame, we'll look at a 1 hour first of all. You can see here that the break was on as we were approaching it. Higher high, higher low sequences everywhere. No different when it did actually break through. And then we had creeping up on the 20 moving average all the way to the top. That was obviously the news that made it all go sideways, but that's okay. And then it came down and did its thing on the way to the previous, well, initially to the actual break. So you can see here on a 4 hour chart, same deal, higher high, higher lows all the way up through there, came back, tested 20 moving average and back down to that 66.20 mark, which we know is quite important. So really, it played the game very well this week. The Aussie dollar index is going to be an interesting one. I will have a look at that shortly, but given that we are at a role reversal zone again, we would probably expect that the 20 moving average will give us a little bit of support. We can see here at around that sort of 66 marker that's probably the next target. I would say it's not very far away. It's only 20 pips away, but the 20 moving average is fast approaching. So I would expect it will find some sort of support at the 20 moving average and at that 66. And at that point, we make a decision. If the market starts to make higher high and higher lows on a smaller time frame, we'll aim up for that previous high again at around that 67 cents. But if it breaks the 20 moving average, then we might be in for a little bit of a ride down. And I think the next level for it after that would be around that 65.50. So around these highs here that you can see. So really we'll let it make its decision around this level and we'll jump on board whichever direction it starts to go in the smaller time frame. My preference would be to the long because that way it would make sense. It's a 38.2 pullback of that move. I would expect without drawing a fib, especially around the 66, and that would be a good reload zone from that point. All right, we'll have a look at the dollar index because it's been very, very important, but it has actually, lifted this week. We can see it was drifting down. It got to the point of almost no return. Had it closed below here, we would have been in quite a little bit of trouble, I would imagine. That would be a real problem in terms of where it could go to from here because the weakness could set in and we could be, all of a sudden trading at 93. But it did hold up. It did its job at the support level. So realistically, it hit the 20 moving average, as you can see now. Again, if you go to a smaller time frame, you're going to see all of the moves that are required on the way down. Higher high, lower high, lower lows, all the way to the 20 moving average. Very, very basic trading here. Of course, this is all the inverse of the euro, but regardless of what instrument you choose to take advantage of this move, you can see that we've got very good patterns all the way down. And once it got cracking up, after the interest rate decision that we saw here the other day, it started tracking up and found support where it really needed to find support. It had to do this or we would have been in a fair bit of trouble. There's no question about that for the dollar. So let's see what it gives us now. I think that the 20 moving average could prove to be a little bit of a barrier for it, but it's more important actually that there's a very heavy level of resistance there. You can see, I'll pop a line there so you know exactly what I'm talking about. It's very, very heavily defended. You can see right through there. There's very, very strong support at around that 97.50 area. It needs to break through there before it convinces me that it can go longer up to the highs of around 98.80. That would be a good move, but again, we need to do a little bit more, recon at this level to see if we can get it broken through. If, of course, it reverses here, it's hit the 20 and that resistance. If it does reverse here and finds itself back underneath the 96.50, then we're looking lower and, and probably considerably so. So we'll keep a very close eye on it. But, pretty good trading happening on this one. We'll go to the all-important S&P 500, which is, again, trying to break to a new high. Well, it's definitely broken to a new high. Whether it closes there or not is going to be another story. We've still got a little bit more trading to do for this session. But it's shaken off the interest rate and inflation news, and it doesn't seem to be worrying this market. It's been creeping up, as you know. Look, it's one of those ones where you've got to treat it very, very carefully. It's probably not my choice of trade right now because I think that it's precariously placed at a point where, yeah, we're in seasonality when we expect volatility late September. I mean, we probably should have expected it already, really, but we've only got 11 days left and it hasn't really sold off. So maybe this is the September that's going to buck the trend. Very, very possible, but it's not going to get any of mine until it actually sorts itself out. And I do worry about these all-time highs in a market that is still a little bit cautious about what's actually happening. So probably I would want to see it if you want to trade it, I would let it come back to a 20 moving average first and then look for an opportunity to actually join the trend back to the previous high. I'm not big into trading into all-time highs, but not a problem if it is going to go from a previous support level up to that all-time high. So I think that would be the best way to play it. Keep it your trades relatively short on it, and if we do get those moves, then we can trade it. But in my mind, I would be looking for a short opportunity would be down to the 20 moving average. In my mind, that's what I would be looking for. So if it does start to lower high, lower low sequence on a smaller time frame, I'd be aiming for the 20 moving average, which has held it up almost the entire time for the entire move. That wouldn't be the worst trade in the world, but I think that you're really looking at smaller, short and sharp entries into this one. I wouldn't be looking for anything too long term. The best way to play it is to be in and out. That way you avoid and work with the volatility and put the volatility in your favor. Okay, we'll go over to gold. Gold's been an interesting one this week because it did obviously make a new all-time high again, and just as importantly, a new psychological high, which is around that 3,700. You can see it tested it again in the previous session, and the last two sessions have been a little bit negative. Look, it found a day, or basically a week of support around this level where every day touched it, around that sort of 36.30 area. It's a pretty important zone for it. Because it's a very recent zone, obviously, but you can see that the interactions here for an entire week found support there. In my mind, this is probably a level that if it's going to hold up and continue higher, it needs to hold at this level because there's not a lot really, apart from the psychological level of 3,600, which is only a psychological level. So I wouldn't be relying on it for a lot of support because, psychological levels work very well into the future when you're aiming for a take profit. But if they've got no backup of any other support or resistance metrics in technical analysis, they don't always prove to be very reliable on the way down. So just be mindful of that even though I've got a line there, actually I'm going to take that line off because it was really more a target than it was a support level. Just be mindful of that. Probably the 20 moving average would be the place I'd be looking for, depending on how long it takes, of course, is where the 20 moving average is going to be. But right about now, it's sort of sitting between 3,550 to 36. I would think that would be the zone that I'd want the pullback to. And if we see a change in trend on that one and we see a higher low sequence, we'd be aiming for the previous highs again. So really one to watch. I think that if this level breaks through here, the 20 moving average will be the next target for it. But trading to the all-time highs would be the way I would play that one if we see a sequence of higher highs and higher lows on a smaller time frame. All right, we'll move over to Bitcoin finally, and look, we've seen a break of a very, very important zone here. We can see that the that 117 500 or 117 500 has already been broken in today's trading, but that was a very important zone because of all the bodies that we saw through here. It's been higher low sequencing on the daily for quite some time now, and we've got a 20 and 50 moving average cross, so no real surprise to see it do this, but it needed to break above that 16,800 in order for us to start looking at potential longs, and it certainly did that. So now that it's broken through, I think the targets that we can be looking for in front of us are around that sort of 19,800 to basically 120,000. So that is our next projected target because we've got a lot of body of movement inside those two zones. And now that we've broken through these bottoms again, that really opens itself up to a potential trade up to around that 120,000. So pretty decent momentum kicking in to break that trend too. Like you say, you can see that we've got a high low sequence on a daily that has effectively started from the 107, which is our initial target on the way down. So it's done a pretty good job. There's enough momentum behind it, and realistically, there's enough meat in that. There's about 2,500 points nearly that you'd be able to get in terms of movement on the upside if we can see that continued momentum. So all we want to see is a series of higher highs and high lows on smaller time frames, pullbacks to the 20 moving average, and then we'll be hopefully on our way up to around that level. So I hope you had a great week's trading. It's been a very, very interesting week with the waiting for the interest rate decision and the press conference, but the market will hopefully now start to find its feet and move a little bit more fluently early next week. So we'll see what the market gives us. Have a fantastic weekend, and I look forward to seeing you all next week.